Hello everyone, myself Dr.K.KARPAGAMBIGAI, Assistant Professor, Department of Business Administration, Dr. S.N.S. Rajalakshmi, College of Arts and Science. Now we are going to see about the forms of investment. Here, investment refers to the allocation of money into various assets with the expectation of earning income or raising our capital or increasing wealth in the future. The major forms of investment are as follows. First one, equity shares, that is stocks. Here, equity shares represent ownership in a company, that is owner of the company. Here, shareholders earn return through dividends and capital appreciation. At the same time, equity shareholder have to take a higher risk and higher return. Advantages. First one, high return potential will be expected in the equity, and the ownership rights in the company also available. Third one, protection against inflation. Disadvantages, high risk due to market fluctuation. Returns are not guaranteed. Example, shares of Infosys, Tata Consultancy Services and Reliance Industries is a high majorly used by the shareholders. Second one, preference shares. Here, preference shareholders receive fixed dividend because before equity shareholders and have priority during liquidation, because here the preference shareholders do not take a much risk. They need some fixed dividend. They are not taking any risk. So here advantages are fixed income, there is no risk, and lower risk than equity shares. Disadvantages here, only limited growth potential. We should not expect a high level. No voting rights in the most cases because only equity shareholders having the rights to voting all the places. Third one, debentures and bonds. So in equity shares and preference shareholders will receive the dividend. Here the debentures and bonds will be a fixed income securities will receive the interest. Here issued by the companies or governments, investors receive regular interest and repayment of principal at maturity. Advantages, stable income, lower risk compared to the stocks. Disadvantages also lower return and interest rate risk because some people will not be provide the interest when they get the bulk amount. So at the time we have to take some risk to return back the amount. Example, government bonds and corporate bonds. Next, mutual funds. Here, a mutual fund pools money from many investors and invest it in dividend securities managed by professional fund manager. Here, we are collecting the small amount from the many investors, pooling a small investor and investing in the high level. Advantages, professional management, diversification, suitable for small investor. Disadvantages, here managing fees, return depends on market performance. Fifth one, bank deposits. Here it's a bank deposit is a safety for everyone, but it will be receive only low returns, fixed returns compared to other debentures, bonds and stocks. Here offered by the banks provide fixed returns over a specific period. Here advantage is highly safety, guaranteed returns. Disadvantage is lower return, may not be inflation. Next one, provident fund. Provident fund, public provident fund is one of the long-term savings of every employees because it will be supported in the future. So it's offered by the government and offer also tax benefits also. Advantages, safe investment, tax benefit, attractive interest rates. Disadvantages, long lock-in period. So whenever we need, we can get the amount in the provident funds office. Seventh one, real estate, investment in land, residential property, commercial building or apartments. So we have to take much effort, much investment when we go for a real estate. Advantages, capital appreciation, rental income. At the same time, some disadvantages, require large capital, low liquidity, sometimes amount will be locked. That means Some people can't able to follow them. Next, gold and precious metals. Investment can be made in physical gold or gold ETFs or sovereign gold bonds. Advantages: hedge against inflation, high liquidity. Disadvantages: no regular income, price fluctuations. Next, insurance policies. Certain life insurance plans combine protection with investment benefits. Advantages: financial security, savings component. Disadvantages: lower returns compared to other investment. Thank you.